about the distinctions between audit and audit-related services. Now, we mentioned that audit, we know that what audit is, we know there's a form of assurance engagement. It gives a true and fair view of blah, blah, blah. Talked about it in our previous lectures. It gives a reasonable level of assurance or high level of assurance. But audit-related services do not provide the same high level of assurance, right? And in some cases, they do not provide any assurance at all. So they provide zero assurance or limited assurance. Number one is what we call, I call it CAR, C-A-R. Number one is, let's say, compilations. Now, what do we mean by compilation? The practitioner is engaged to prepare information rather than to audit information prepared by somebody else. For example, an accountancy firm may be engaged to prepare a tax computation for a client. So that is compilation. So that's C. They have agreed upon procedures, which is A. This is an engagement where the party hiring the practitioner specifies the procedures that the practitioner should follow when performing the assignment. That's A. You have review. So CAR, C-A-R, review of data are checks carried out on information prepared by another person. So those are the audit-related services you have. Types of review engagements. In a review engagement, the practitioner is engaged to review financial information or other information, but not to audit it. So you have the types are an attestation engagement and a direct reporting engagement. Now, when we say attestation engagement, to attest means to vouch for something. To attest means to vouch for something, to vouch for something. In an attestation engagement, a practitioner is engaged to attest to something. So basically, an example would be where a practitioner or an auditor might be engaged to attest to the fact that certain procedures have been performed in the prescribed way. And we also have direct reporting engagements, right? In a direct reporting engagement, practitioner is engaged to provide a special report on some aspects of the client's affairs. So those are the two types, basically, of review engagement. Then we have common forms of direct reporting engagements, right? And one common form is what we call due diligence engagements or due diligence work. I'm sure you've heard it. So this is where the practitioner is engaged to make inquiries into accounts or the organization or to the activities of the organization. So sometimes when there's a merger or a takeover, you see due diligence being done. Yeah. So what are some of the items you investigate in a due diligence exercise? Number one is financial performance. If you are going to do proper due diligence, you check for financial performance. It's just like maybe you are going to buy a car. Check horsepower and all that. Number two, you check also for operational issues. Operational issues. Number three, you check for management representations. Now, what do we mean by all of this? I'll come to that. You also check identification of assets, and you also look at the benefits. You do a cost-benefit analysis, the benefits and cost of the takeover, if it is a takeover. So financial performance, we know, what are the numbers saying? What are the ratios saying? Operational issues, we are looking at things on the ground, like costs incurred, what are the efficiencies happening on ground? What about the labor turnover, operational stuff, things that happen on a day-to-day basis. They have management representations. right? There are situations where management may provide representations to the potential buyer, you know. So in such situations, you need to do due diligence on that. So management, for example, may tell you that, oh, this company, we don't have any litigation. Is it true? You need to find out. Then identification of assets as well. You know, we need to know that what the company is saying, their assets, is it actually part of their assets? We need to do due diligence on all of that. So through that exercise, we get what we call due diligence reports. Due diligence reports. And for those who are doing strategy, one of the things you see in a due diligence report is SWOT analysis. You see corporate governance analysis. You know, these are things we've discussed in strategy. You see legal issues, any audit issues in the past, all these things you see as part of sometimes, most times, as part of the due diligence report. There's no format to a due diligence report, but some of these issues appear. We are still on review. We said that audit-related services are 3: CAR, compilation, agreed upon procedures, and reviews. Now, what are the principles to apply to review engagements? ISRE 2400 sets out some general principles when it comes to review engagements. So, number 1 is comply with ethics. Number 2, obtain sufficient appropriate evidence. Number 3, exercise professional judgment. These are things you would even do when you are doing an audit. You know, then what are some of the procedures? What are some of the procedures, right? One of the key procedures you see is inquiries. The practitioner shall make inquiries into the entity's accounting policies, practices, and procedures, material assertions in the financial statement that are subject to the review, and all that. It's very, very key. Okay. Then at the end of your review engagements, like we said, you would report. You do a report. You do a report. And this report would include the things we discussed in some of the things we discussed when we are talking about review engagements. The outcome of a review engagement will be a report from the practitioner. The report will be in one of 2 main forms. That no matter came to the attention of the practitioner, or some matters have come to the attention of the practitioner. So if some matters have come to the attention of the practitioner, what do? The auditor needs to describe the matters, you know, the matters involved, assess the impact of those matters, and determine whether it is material or pervasive. Determine whether it's material or pervasive. Now, I just put this in to show you an example of a review of the interim financial information. So introduction. So there's a title, there's an appropriate addressee. The introduction says, we have reviewed the accompanying balance sheet of Caleb entity as of March 31st and the related statements of income, changes in equity, and cash flows for the 3-month period, and a summary of blah, 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 blah. Management is responsible for the preparation of the financial statements. It's always there. And it tells us the scope of review. So you have an introduction, you have a scope of review. in accordance with international standards on review engagement, it will tell us that we did so and so. So a review of interim financial information consists of making inquiries. So that's the procedure here. Primarily of persons responsible for financial and accounting matters, and applying analytical and review procedures. Then one of the key things that they mention is that a review is substantially less in scope than an audit. It is less in scope. So that's the scope of review. Then it comes to talk to you about the conclusion. It's either it will say nothing has come to our attention. If something has come to our attention, they mention it. Then the auditor, the dates, and the address. Now let's talk about agreed upon procedures. Agreed upon procedures. And agreed upon procedures engagements. The client has the client also engages, the client that engages also decides the procedures that the accountant will follow. They'll decide the procedures that the accountant will follow. This is very different from an audit engagement, where the auditor decides the procedures to be followed, right? So that's something to take note of. Now, the international standards on related services, ISRS 4400 or 4400 or 44400, talks about this whole agreed upon procedures thing. Now, one of the things that they talk about that I would want you to take note of is that because the one engaging is